Morning, ladies and gentlemen, and Happy New Year. It is the very last day of 2024. These years just keep going faster and faster as time goes on, everybody. And we are here live with a highly anticipated guest today, Mr. Walker Music. And this is kind of a long anticipated thing because a lot of people in our community have already been in communication working with Walker. So this is not a situation where we're kind of like trying to figure out if what he does works. We know it already works and we know people are already using it. We're going to be doing this for ourselves and we're going to be getting into funding for your business. This guy's got it streamlined. He's got it easy. We would never recommend something that we didn't know, like, trust, and use ourselves. So we're going to get into business funding with Mr. Walker Music. RJ, Happy New Year. And how are we doing today?
Yeah, it is. It's New Year's Eve. Crazy. I've been ready to go since after I ate my last plate for Christmas.
Yeah.
So we're ready to rock and roll, and we're so active and so happy to have Walker here today because it's one of those topics where it's like, is it possible for my LLC? You kind of see those videos about people teaching about an LLC getting funding. And really, we haven't had somebody in our circle that did this at the level that Walker is doing it, who we know and like and trust. So I'm excited today because I have the questions also around business funding and credit. And we went down this path before, but we didn't really have a grasp of where to kind of use it now in our community, because a lot of our community, they're doing BRRRR deals, and they want to use that business funding to get gap funding, right? So I think this is going to be a great live stream today. So happy to have you on here, Walker. We will have some time for some Q&A as well, because I know this is one topic that we'll get some questions, and you'll be able to get a hold of Walker also. Happy to have you on here today, Walker. In a new setting, by the way, right? In a new setting, new state.
Right.
You're settled in?
Settled in North Carolina. So it's really nice here. It's a little warmer than Ohio. And but you still get all the seasons, it's not like it's overly tropical or anything. So it's nice.
Well, hopefully you're not affected by any hurricanes or anything like that. But talk to us about what you got going on, the business funding.
Yeah, so the business funding is something that I stumbled upon because I don't know if a lot of people know, but like my background was real estate originally. I know a lot of your community is. And so going through it, like I understand, like you need like your marketing money, you need your,
operations,
operational capital. Yeah. So I personally worked with another company to go through it has like popular terms, like people will say like credit stacking or business funding or, whatever you want to call it. But at the end of the day, like it is a really good program if it's done right. I know a lot of people are positioning it on social media, and it's not quite that easy. There is a very specific criteria that you have to have for your business, for your credit personally, which is important. And yeah, I mean, there's just the credit basics, the business funding, how to secure it, the best options for your business. There's a lot of things that we can dive into for the.
Sure. Talk to us about some of the criteria that you need. Like somebody approaches you, what are the boxes that need to be checked where it's like, I can't help you because this, and this, or it's like, you got to kind of have these steps in place. What is some of the criteria?
Yeah. So a general criteria is there's two sides. There's the personal credit side, and then there's the business side, the LLC side, S Corp side, C Corp side. And it's not just for LLCs. You can have 508s, you can have 503s, you can have LLCs. Any business entity can qualify for the business funding program. Depending on the product is going to be the answer. So there's lines of credit, and then there's credit cards is the most common way to get the funding.
Do you get both?
You can get both. The 0% interest is always going to be through the credit card. you'll look at like 50-ish thousand per credit line on those. And the criteria for that is 700 or more credit score. The business information is important in the sense of age of business. You look to have at least 3 years old on your LLC or S Corp or C Corp. And then it's from there, it's a no doc funding program. So there are numbers that the bank likes to see, but there's no verification on those numbers. It's no documentation, stated income. You state that information, and then you can run that play as long as you know the information they like to see. Like, there's no issues there. That's mainly personal guarantee on the credit side. So if you're 700 credit, no derogatories, no delinquents, you don't have like 15 inquiries on your credit report, then you'll likely qualify for that program. Now, again, that's only like 50,000. If you're looking for a larger product, you're going to want to go line of credit. Then you're talking like tax returns and, actual income verification type documents, which I usually talk to each client about like what they're looking for and figure out what's the best matchup for them. So the qualifications on the personal credit side are always 700 or higher. And then the business business qualifications are going to depend on which product you're applying for.
Understood. What do you got, RJ?
So from the personal credit standpoint, is that where somebody needs to start first? Let's just say my credit's shot. I'm in the low 400s. I never had, credit because I got into the real estate investing, and my first, focus is to get my active income up. So I'm fixing, flipping, and I'm wholesaling. Let's just say that's me. My credit score is in the 400s. Okay. When I got into this, I, put everything, leveraged all my credit cards, maxed everything out because I'm putting all that capital into the startup capital to marketing. And so I'm coming to you. I've got 400 credit score. Before I can get business credit, do I need to fix my personal credit first?
Yeah, you're going to want to fix your personal credit first. And I can resonate with that because I was there. My personal credit when I started, even knowing anything about credit, was in the 500s.
Yeah.
So I totally understand where people are coming from in that regard. And at the end of the day, like, if you're going to want to utilize these financial institutions through the relationship managers that we have, you have to have the right personal credit. So we do offer the credit repair services in-house. That's a large part of our business is handling the credit repair side. We don't necessarily do credit repair, so to speak. Like that's not the positioning of it, but we do optimize people's credit specifically for them to get the business funding. And that's all done in-house with our team. So if they're at 400 credit, 500 credit, 600 credit, the very first step of the process is a general intake call where we actually ask to see their reports, and then we completely engineer the game plan based on where they're at today and their credit. It doesn't mean that they can't go through the program. Some people qualify right away. Like, some people have 750 credit scores and they can submit their applications the next day. Some people have to wait 2 or 3 months to optimize the credit and get that stuff figured out. But there's never a time where, if they want to do it, that we can't work with them to get to a point where they could receive an approval from the bank.
Gotcha. Okay, so stay there. So you said you have to optimize personal credit. What does that mean? What does that look like, and what does that mean?
Yeah, so not every credit FICO score is built the same. So you can see somebody who has a 750 score, but maybe they just sweeped everything off their credit and they don't have any accounts. So it seems like they have a 750 score, but maybe there's only 3 accounts on their profile. That's actually not a strong. I'll position it this way. Your credit report and your FICO score are not the same.
Yeah.
So like, your FICO score can be one thing and your credit report be another. A 680 with no derogatories, 10 plus accounts, no delinquents, no inquiries is actually going to pull more weight than like a 720 with late payments to the bank, to an underwriter, right? Because that's, at the end of the day, that's who these applications are going to, is an underwriter at the financial institution that we're working with.
Gotcha. So I've heard this before where, your credit score is fine, but you don't have enough accounts, right? You only have maybe a 2 or 3, and they're calling that because I've been through a round of this before, and I didn't understand it, but now I kinda do, is that, based on what you're telling me, is that you need to have pretty much uh, closer to 10 accounts where you have, put on your credit. You've had, whether it's like credit cards or a car or whatever, right?
Yeah,
Um,
there's installment accounts and revolving accounts, and mix of credit is actually, it makes up a percentage of your overall FICO score. So
uh-huh,
like open accounts, closed accounts, the type of accounts, it all matters. Um, the closer you can be to a double digit profile is going to be really solid, but it's not
yeah,
required, so to speak.
yeah,
It's not black and white in the sense of, um, once you do this exactly, then you're ready to go. Because every single person's credit profile is different. You
yeah,
know, every creditor they're working with is different. One person might have Key Bank, and another person might have Chase Bank on their profile. So it's
yeah,
not linear like that. But what we do is we frame it in the sense of no negatives, enough positives. You have a strong enough credit limit, and if you don't, then we work off of that. There's so many self-reporting accounts now, rent reporting accounts now, like ways that you can boost your credit account volume from bills that you're already paying that you may not even be benefiting from in that regard. You can self-report Xfinity or Verizon or Spectrum or
mm,
AT&T, and you can stack your account quality and payment history that way, as opposed to trying to go and get like a $300 secured credit card and waiting for that to report and go through that process. So there's a lot of ways to strengthen the credit profile without like having to open new accounts or take out loans or go get a vehicle or something like that.
I got a question. So somebody gets rolling, you help them get a couple credit lines. How easy is it to liquidate that credit, put it into your bank account, and then because that's what a lender is going to need for a real estate investor, right?
Yeah.
So if you're doing like a purchase and a rehab, if you're working with one of Cream Funding, we work closely with Vontiv and they do a great job. If you're looking for those kind of loans, creamfunding.com. But you got to have the money. You got to have, they'll do like 90% loan to cost, right? So you got to put 10 to 15% down. And in order to close that loan, you got to have that 10 to 15% down in your bank account. So my question is, how easy is it to turn it from credit into cash liquid in your bank account so you can flip real estate and do real estate deals?
Yeah, that's a great question. And it's actually very simple. So
Good.
if you have if you or if a business owner, or even I off the record offer that as well, like where we can do some liquidations. But all it takes is a standard invoice. You invoice the client for whatever service it is, right? Whether it's a intra company or an inter company transaction, doesn't matter. But you can charge the card or use the line of credit to pay for a service or maybe a coaching call or something, right? And that coaching call just so happened to be $30,000. You use your credit card to pay for that transaction, and then the money is in that account, whether it's your account or somebody else's account. They wire it to you, whatever. But it's very easy to get that off. It does take a few days, I would say. Standard credit card processing timelines are maybe 3 to 5 days, depending on if it's like a new merchant account or if it's a seasoned merchant account that you're working with. Because you could use QuickBooks invoicing, Square, Stripe. I mean, there's a ton of different payment processors out there. But it's simple. You charge the card, you money shows up into the payment processor, you withdraw it to your account, and then you're moving and grooving.
gotcha.
Excellent.
So let's use our example for the starting real estate investors, done a lot of doing some wholesaling, getting into fix and flips, and they're fixing up their credit, and they're in the 400s. and you're optimizing their credit. Let's just use that word, optimizing, kind of like that word. So when are they ready? What needs to happen for them to be ready to approach getting this business funding? Like what needs to happen? What does their score look like and all that for them to get into business funding?
Yeah. So again, it's more of a there is a level of manual review that has to happen, because at the end of the day, like, the main criteria is the 700 or plus score, credit utilization, the amount of accounts. Definitely no derogatories or delinquents on their report, like, for sure. That's
So when you
gonna
say derogatory, that means what? Like
so that
any
means
collections?
correct. Yeah, collections accounts, late payment accounts. If there's a charge off account, all of those things have to go first, because these financial institutions are not like um, it's not hard money. Like, we're talking about 0% interest. So, like, this is through Chase Bank, Key Bank, PNC Bank. This is through Bank of America, like major financial institutions that you're not just getting one round of business funding with. Like, this allows you to build a relationship with that bank. So I have clients that start off with a $50,000 credit card, 50K. They had a 700 score. They got approved. We went through the process, and 12 months later, they have a line of credit with them. They were able to increase their credit card limit from 50 to 100,000. Like, I personally have an $80,000 credit card with Chase Bank. So, and that's just one of the cards with one bank. So you can start to build that relationship with your payment history, on time payments, and using the card, where they'll literally just start increasing your line too. So it's not just a linear one time thing. Like, you get your personal credit in position the first time, no derogatories, no delinquents, solid payment history. You get the approval, and then from there you can actually build a relationship with that institution. And I mean, as we all know, like, when you have a relationship with a bank, that tends to be a stronger benefit for you than if it's just like a one-time transaction.
Right.
So here's the deal. I mean, we got people in our community right now just closed a deal off market. They bought it was like 3 parcels. They got for like $8,600 with a tear down house. And then they got the house torn down. And I mean, you could be doing these cheapo deals when you're marketing as a real estate investor, when you're opening up that fishnet, when you're opening up that funnel and you're getting these cheapo deals. You could use this credit, just like Walker just said. You invoice yourself, you get that money in your bank account, you can wheel and deal with 0% money in trade, right? And you can make money. It's a no-brainer. You just got to work with somebody who knows this stuff, who's like a nerd with the credit thing. It's not your job as a real estate entrepreneur to like figure all this out. I'm going to build relationships with Key Bank today. Just work with Walker. This is what we're doing, right? So that's what rich and successful people do. You just find the right players for your team and then let them do it. And then you can pursue deals. And now you have funding. So we're super excited about it. I did just share my screen, but we have a site set up to contact Walker, creambusinessfunding.com. And Walker, you'll hop on the phone with people. There's no consultation fee, right?
No consultation fee. They submit the form through the website. It comes through the email. We pick up the phone and call them. I pick up the phone and call them too, so they're going to speak directly with me. It's not going to be like a VA or something like that. I walk them through the steps a little more directly based on their credit report, because again, it's business funding, but the personal credit has to be in place. It doesn't affect your personal credit. Like, once you go to get the business funding, it's not going to affect your debt to income ratio. It doesn't show up on your personal credit report. It shows up on the business side. So, like, if you have Experian business reporting, if you have Equifax Experian or Equifax business reporting, if you even have like Duns and Bradstreet, like, you'll see this there. And not only are you getting the financial benefit of having the access to that credit, it's also building your business credit at the same time. So now, like, if you have an LLC that's going to be like your operating LLC for a long time, a lot of real estate investors specifically, and I'm speaking from personal experience, and I'm sure you guys have this same experience, is like banks don't like to lend to real estate companies like that. You could probably get a better loan being a property manager than, like, you're not going to go to the bank and say, oh, I'm a real estate investor. And they're going to be like, oh yeah, let's throw some money at you. Right.
Yeah. It's like
Right.
the SBA. You can't be like a wholesale company and go to the SBA and be like, I want some funding. They don't like that business model.
No, they don't like that business model. So in the sense of the business side, because we've talked a lot of the personal credit side, the business side, how to optimize that for the bank is there's something in the world of banking that's called an NAICS code. And what that does is it allows the bank to identify if you're a risky business to lend to, or if you're a lender-friendly business to lend to. So outside of if the person ever comes through to to work with us with Cream Business Funding, this is kind of like a freebie nugget, if you will. Never position your wholesaling company, your fix and flip company as a real estate business that you are operating. Your business should always be consulting, marketing, or some type of like administrative management type of business. So whenever I go to the bank, yes, the area of real estate, the area is still real estate. But what I tell them I do is I actually do administrative consulting for other real estate professionals. Because if I'm an underwriter at the bank and I hear that this person is coaching other real estate professionals, they have their clients who are professionals, that's a very different experience than if this person comes to me and says, I'm trying to buy some properties to flip. Right? So the positioning of your business is very important when you go to the bank. So that's all the stuff that we handle on the business side of the application: the correct NAICS code, the positioning of your business, the business plan, so to speak, in that regard. So that part's very important when you're going to the bank. That alone will get you either an approval or a decline immediately. If you get the wrong NAICS code for your business, when you go to set up your account or when you go to apply, you're not going to get the exposure you're looking for if it's not the right industry.
We got a question that came in. Website again is creambusinessfunding.com. And a question, how fast is money available once you're kind of applied and approved?
Yeah, so that's a great question. On the availability side, it's almost instantaneous from the sense like there's no holding period or waiting period. It's like the application goes out. This does go to a manual underwriter at the bank. So another advantage of working with us is that this isn't going through the algorithm. So what happens on the client side behind the scenes is once you're ready to apply for the funding, we actually set up a call with a business relationship manager at the bank. This isn't like a banker that you can go sit at a desk with. This isn't like your local branch manager. Because whether they'll tell you this or not, I'll tell you this, that it's true. And if anybody's in banking, you'll know this to be true. But the banker at the branch, the online application, it's going through an algorithm. And that algorithm is not like, oh, let us give out the most money to every person who applies. It's quite literally the opposite. It's a risk management algorithm. So every little aspect of your application, the moment that it flags any type of concern, there's no like, well, let me take a look at the rest of this. It's decline.
Oh, wow.
Right? So you could have a 750 score with Chase Bank. You have 6 inquiries on your profile. You got declined immediately, even though you have a 750, because you have 6 inquiries, and Chase has a 5 inquiry cutoff.
Wow.
So
I didn't know that. Are inquiries also derogatory? Do you want to get those off, or are they just...
We do sweep inquiries before we apply. So we're going to get all the inquiries removed for each client. That's part of the credit services on the personal side. Whether they have 5 or 50, it doesn't matter. That process remains the same. But every bank has a similar ideal target customer, so to speak, to lend
Yeah.
to. But they all have their own little niches of what they look for differently. And
Okay.
that's like why working with somebody like us helps the client as opposed to just going to the bank and hoping that they get approved, right? Like there's a difference when you're like, hey, I have this client, here's the revenue, here's the personal credit. They're a good fit for you because me and that business relationship manager have talked about what they're looking for.
Yeah.
All I do, the simplicity of it is I ask the banker, how can I get my clients approved for the most money? Well, they need to look like this. Okay, great. Client, we need to look like this.
Yeah.
We match
Love it.
that up, pass them off, and now they're working with the bank.
I love it. It's like reverse engineering is a strategy, and that's kind of what we teach with our students when we're looking for rental properties is go find the end financing first. And now that you have that, now you can go and pick and choose where you want your rentals to be. Obviously you want to be in a landlord friendly state, but
Right.
um
Oh, and sorry, real quick, the timeline on the availability, I kind of missed that part. When you get approved, it usually takes 2 to 3 days for the underwriting to go through, and then they mail out the card. Or if it's a line of credit that you're applying for, you get access to that line of credit like typically the next business day. So, and you can even ask most financial institutions if it's like an urgent situation to like next day the card to you.
yeah,
So, in terms of availability, you're just talking about a couple business days. I mean, it's nothing crazy, you know.
gotcha. So I love your point of view because you also come from the real estate world. Got a lot of experience fixing and flipping homes. You already kind of told us the one play where you kind of utilize, the credit cards. Is there anything else you want to share that's now that you've kind of seen both worlds is that would help a real estate investor utilize this business funding? Is there anything else you want to share? Another hack? Thank you for that nugget too, by the way.
Yeah, for
Um,
sure.
with the
Um,
NICS code and not being a real estate fix and flipper. You want to be like a marketing and consulting or administrative consulting. Huge
exactly.
hack. Hopefully you guys got that. But share one more thing that you've seen now that you've been able to utilize your business credit funding for the real estate business, Walker.
Yeah. So I would say, what's one of the more impactful ones? Okay, I would say like in the sense of having the business funding, one of the things that I would recommend is like in this, I don't know if this is real estate specific, but I think it's one of the more valuable things that I could give information on. And it's like a lot of people, so because look, what we can do is we can credit stack, right? And we can get someone $150,000 of business funding
Mm-hmm.
within. I mean, if their credit today is good, like let's say they got a 750, no negatives, business stuff's in place in like 2 weeks. But the reality is like have a plan for the business funding because it's 0% interest for 12 months. Okay. So the benefit of it is primarily the first 12 months. Don't get me wrong, having access to capital is always great.
Yeah.
It does go to like a variable interest, which is a standard credit card rate. Sometimes it's like 13, 17. It just depends. But for the first 12 months, have a solid plan to turn that because the 0% interest is in business, in my opinion, is like a crazy superpower because I don't know if you guys know how like the monthly payments work on that. But if you spend $100,000, you just liquidate $100,000 and you put it in your bank account. Guess how much you're paying monthly on $100,000 at 0% interest? What's your monthly payment on 100,000?
Be zero,
And
right?
it's not zero. It's
Oh,
0% interest, but there is still a
what?
principal payment you have to make.
Oh,
But
there's a
the
principal. I don't know.
yeah, yeah, yeah.
Isn't it like 4% of that?
It's
Or
actually 1%. You pay
wow,
$1,000
thousands.
a month for 12 months to have access to $100,000 in your account. Like, I
Gotcha.
don't know any lending source where it's like, hey, Dave and RJ, you guys got 100K liquid right now? You want to do this loan? I'll pay you $1,000 a month for it for 12 months.
No,
And
that doesn't
then
exist.
that's what I'm saying. It doesn't exist. So you have to use this. Like, you know, there's that saying where it's like one good year can make up for like any past failures. Like, if you use the business funding in that regard, like to make your one good year, like it can be a superpower. If you can turn that 100K, $1,000 a month, I mean, how many times can you turn it that year? A standard cash conversion cycle in real estate's what, 3 or 4 months? So if you can use $1,000 a month to tap into 300K that year,
Mhm.
I mean, you can grow your business significantly. But the business funding isn't upgrade, you know, my lifestyle or go on this trip or whatever.
No.
Like, use it for marketing, use it for 10% down, flip it, pay it off on time. And then in 6 months, you can go to the bank and say, look, I turned this twice,
Yeah.
right? I need a bigger line. And they'll give it to you. Like, you start to become the bank's best friend when you're actually using it
Yeah.
and you're paying it off on time and you're turning it. Like, they will, if you manage it that way, like, it's going to be very favorable for you long term.
That's massive, man.
Got
Go
a
ahead, Dave.
question here. Thank you, Walker. How is consulting a more effective business model to banks over fix and flips? Let me just jump in on that one, Joey. And thank you for being here, Joey and Justin and everybody else. But here's the deal. Like Walker just said, it's all like algorithm. It makes no logical sense. It doesn't matter. You could be this fix and flip guy who's, you know, amazing and you got all this. In the eyes of the bank and the algorithm, it's a riskier play than somebody who's a consultant and makes way less money. Like, I don't know. Is that right, Walker? It's just the way the banks work. Like, you know, that NCIS code, right? That's what it is, NCIS. It's the business code. I guarantee they have their systems, their computer systems, where certain NCIS codes are probably booted out immediately and never even hits the
Literally.
desk. Yeah. So
Yeah.
it's not that a consulting business, Joey, is more effective business model. It is more effective for getting business funding. It's more effective to actually make it to the banker's desk, right? There's
Right.
certain businesses based on that NCIS code that won't even hit the banker's desk. You won't even, you're denied immediately. So, sir, that's the point Walker was making. Is that right, Walker?
For the most part, yeah. And a little more granular is like when you're in consulting, they're expecting you to have it's more obtainable, right? Like, it's more consistent in theory. So in the sense, it's like, even if you take a large scale consulting business that has hundreds of clients, they're probably paying reoccurring. They probably have some type of like retainment fee. They probably have some type of maybe like a quarterly distribution or something where, you know, every 3 months, once a quarter, this, you know, consultant is retaining that client. The retainment makes it less risky. When you're in fix and flip, but it can be extremely profitable. I mean, you know, there's 6-figure fix and flip fees on $100,000 investments. Like, you know, it's great for the operator, but that doesn't mean that you still didn't, you know, let's take our real estate bias lens off quickly. That doesn't mean you still didn't have an interest rate that you have no control over to deal with. The construction component's extremely risky. There's a lot more that's not in your control. When you're working with as a consultant, you have a lot of control over how that relationship goes. You're providing them a service as opposed to like making an investment. That's the main difference. Like, providing a service or making an investment. Those are like, that's what the risk is tied to. Any investment is more inherently risky than providing a service to someone.
There you go. We are, yep, you're very welcome, Joey. Let's put a bow on this thing. RJ, any final thoughts or questions here for Walker while we got him?
No, there was some really good nuggets shared. That Walker, who has years of experience in fix and flip and has been in real estate for a while, utilizing business funding, and that's why we have Walker on here. A lot of guys out there teaching business funding, but they aren't in real estate as well, and so we're going through this process as well. And if you guys, there's three different things I want you guys to walk away from this. So the first one is the NICS. This is their nuggets. NICS code. That was a huge nugget. Thanks for sharing that. If you want to, if you're seeing this live, this is going to be recorded. And you want to rewind to that part because that's a huge nugget. And the other one is utilizing, business funding to kind of fund your operations, which is marketing, which is general administrative costs. These are the things that will come up when you start growing a business. You have your marketing costs, obviously. And in our space, it's marketing for motivated sellers, right? There's a cost to that. And then general administrative, well, you got a CRM, you've got, maybe some direct mail going out. That's, your marketing costs. These are all costs that you can use business credit to fund. But more importantly, you can't just use your, this is the other nugget, but hopefully I didn't miss any other ones, but you can't use your business credit to just fund your lifestyle because your lifestyle is not going to be generating income. You can use the business funding to invest in your assets, which is your business or real estate assets that then pay for your lifestyle. Hopefully you guys got that because this isn't like $150,000 of free money that you could use. It's good to use that in a vehicle that's going to be producing that reoccurring income. So that's the play. And these are just some of the plays that can be available to you once you get your personal. So it's like personal credit has to be fixed first, then you can get into business credit funding. If you want more info on this, head over to creambusinessfunding.com and set up a call with Walker and his team.
Walker, I'll say one last thing super quick that RJ just made me think of is the one more benefit I want to share quickly before we go is just the fact that this isn't like a loan that you're taking out where you get 150K and then you're paying on 150K and you have to go and deploy it quickly. This is an access to capital type of credit line. So you're only paying on what you use. So if you only need 5K, it's better to have more and not need it and not be paying on it, and you have access to it whenever you need it, as opposed to scrambling and trying to find the money. Because I don't know how many times in real estate investing, you're like, man, this new deal came across the table, but I don't have the money for it. And you start scrambling, or this opportunity presents itself and you start scrambling. You can use 10,000, but have access to 100K, and you're only paying on the 10,000. So getting the access to the capital with the business funding is nice because you're not just taking out the loan and then paying on 150. So I just wanted to make sure that was touched on real quick.
You only pay for what you use, right? So Walker, thank you very much for being here. I know a lot of people already are setting up calls with you. We've got nothing but great feedback. So I'm very confident in referring your services. You can set up a call free with Walker himself, and that is at creambusinessfunding.com. It's a no-brainer. The biggest thing is just learning how to do this. You could try to figure it all out yourself. I'm going to hack the credit system. I'm going to follow all the Instagram accounts. You are wasting your time, everybody. You need to be focused on revenue-generating activities. Work with professionals who do this, right? This is what we do. This is what rich and successful people do, So with that, RJ, anything else? Put a bow on this.
No, that's it. Cream business or cream business funding. Cream business funding.
I don't think I've said a domain name right. I've been trying to do my stories. I've been trying to get more active on my socials, and I've botched it every single time. I give the wrong domain, right? Walker, very, very glad we could work with you at this capacity. Again, nothing but great feedback for you and what you do. I'm looking forward to doing this ourselves. Everybody should. It's like free money. Money's not even real anymore. Let's keep it real. I mean, this is the rabbit hole Walker, RJ, and I get off when we're off live. We just go on. Money's a tool. Money is a tool. Debt is a tool. Needs to be used responsibly. But if you're around other individuals like RJ, myself, and Walker, this is what we do. This is what we talk about. Let's all use it. Let's use it as a tool to grow our net worth. And I mean, we should only borrow money if it means we're making more money. I mean, that's it.
Exactly.
Man.
Exactly.
You stick to that rule, you're going to be fine. Hang out with us in our community. Pardon me. This is all we talk about all day, every day. Walker, you are the man. creambusinessfunding.com. Everybody, Happy New Year. Happy New Year. 2025 is only a few hours away. We'll see you all very soon.